Psychological levels or round numbers are very important zones when it comes to trading. It doesn't matter whatever asset you are trading, those psychological levels and round numbers plays a very important role on how that trade will perform. So in this particular video, I'm going to share with you some few tips on how you can actually trade psychological levels. So we are going to talk about how to identify these psychological levels or round numbers. Secondly, I'm going to share with you how you can turn those particular zones to tradable zones. And then I'm going to share with you how you can enter the trade and also exit them as well. Because when you identify this level, that is one thing on its own, but being able to trade them is another strong thing on its own. That's why in this video, I will make sure that I don't just show you how you can identify these zones, but I'm also going to share with you how you can trade them profitably. So if you find this video helpful or you need more of it, all you have to do is simply smash that subscribe button, turn on the bell notification, and then let me know what you feel down in the comment section. So that already said, let's get straight in to today's video. Okay, so hello guys. Now that we're on my computer, let me take you straight and then show you exactly how you can identify psychological levels in the market. And these psychological levels are often round numbers with 2 to 3 zeros. So now, what a lot of people don't get is that these areas of psychological number play important role on how the market actually reacts around them, because they are very key. That's why they are called the psychological levels in the market. Now, even before we go in, let me share with you a typical example of what has happened within this nearby psychological level before we start with the whole tutorial. Take a look at this area of 1.0. Let me just mark it out. Just look at this level here. Let me just adjust it a bit and make it 2, and then double click on it, then go over to the coordinate and make it 1.09. Yeah, just 1.09, then hit on OK. Now take a look at this particular psychological level of 1.0900. You see that the market, whenever the market gets there, it gets a push off immediately. Here is the first push off here. Then after this, the market pulled back into it, came back down a little bit, and then finally when it came into it. So psychological levels are very important in the market, and these psychological levels are whole numbers. What I mean by whole numbers is simply numbers with 2 to 3 zeros behind them, making them very smooth and straightforward. So now that you've understood the idea of this sort of number, so a typical example of this sort of numbers on Euro USD is simply, let me just get my text tool, and then increase the text size to 20. So we have 1.0900, 30, and then 1.09800. So all these ones are smooth numbers, just numbers that have this sort of zeros, 2 or 3 of it behind it, makes it a good psychological number for you to look for trading opportunities. So now I'm just going to cancel this off. So now when it comes to looking for psychological numbers, I always advise you start from the 4-hour time frame. You can go to the daily, 4-hour, or anywhere. So for this particular video, I'm going to use the 4-hour time frame to help you identify these levels. So now I will be using Euro USD because the person who requested for the video actually wanted me to use Euro USD or GBP USD. So for that particular reason, I'll be using Euro USD just to make it pretty much easier for this person to actually get. So now, once we come over to the chart like this, now we have to start identifying the psychological levels. So now, whilst doing them here, all you simply have to do is that just grab your marker. So just put it up here like this. Just focus on getting the key levels first. After that, we are going to do the adjustment later on. So after this, I'm just going to grab it again and then keep it at this other level here. Don't worry, we are going to adjust them later on. And then another level could be within here. Don't just put it at random places, but keep it at very key levels. I'm going to show you all of that later on. Now I'm going to, okay. So I'm done with all the available levels here that I can see really clearly. So the reason why you're using the higher time frame to identify them is that you want to keep them at really clear areas in the market so that everything doesn't look really choppy to you. So let me just give them a different color. Yeah, just to smooth the charts up. Okay, just giving them different colors. Bright white color, I say different colors. Okay, so good. So now that we have them, like now when it comes to smoothing them, you have to zoom in. Now you have to zoom into your chart. Like if you look at this particular one here, the psychological level for this particular one here is around the 1.092 level. So all you simply have to do is just click on it, and then adjust it. Once you click on it, it brings you over to this coordinate part here. So in case it doesn't bring you here, you can just come over here manually and then click on coordinate. Now you see where it is. Now if you look at this very place here, the nearest psychological level to where the this particular market reversed from. What I mean is that where this particular market reversed from is actually the 1 point. Let me just shift it away so you see it. You can see it here. It's actually the 1.09200 level. So for that, I'm just going to click on this and then I'm going to adjust it to that particular level. 200. So now you just have to do this for all of them. Now the market will automatically drop to that particular level. So we are going to observe this level for this particular market here, because that is the nearest one. And then for this particular one here, it's actually there's, click on it and then adjust it to 1 point. Avoid the 0 at the 5 at the back and then make it smooth 0. You can see this is it here. And then once you might think that these particular things are actually close, but no, there's a huge gap between all of them, except this one that has about probably 20 pips within it, but the rest of them have decent space. Like for this one to this one here, you have 33 pips. This here you have about 55 pips, which are really cool. And then from here to here, you also have about 45 40 pips. So now all you simply have to do now, I'm just going to adjust all of them to match up. So looking at this particular one here, okay, so where I mark here is this support. So when you are marking it, don't just mark randomly. Make sure you are marking key levels. Like for this particular two, I'm looking at this highest point in the market. But for this particular one, I'm looking at this area of support here. In case you don't see it, let me mark it out for you. I'm observing this area of support here. You can see that's where I'm looking at for. When I'm drawing psychological levels, I only look at where the market made valuable reversals. So for that, I'm just going to get it up here. So the area is simply 1 point and then 0, and then yeah, that is it there. So I'm only considering this particular one, and then zoom it out a little bit, and then from over here now I'm also going to do this one. So for this one, I'm also looking at this support here, which is the last close of this candle. So I'm going to make it around one at 800. Yep. So I had to come down a little bit. Yes, that's what I'm looking at. Here was just a fake out. So and then for this one, I'm considering this low here. So for that one, it will be, let me just take it to, let me look at it a little bit. Okay, 600. So these whole numbers of at least 2 or 3 0 behind them makes them the great psychological levels for you to actually look into. And for this one also, let me just shift it and look at it. Okay, so let me look at 722. Let me see if 7200. Okay, no, I'm just going to take it a bit upward. So whenever you're marking, just make sure that you're not just marking random places, but you're actually marking areas of values in the market. Now here is it. You can see this one is a support here and was a resistance before. So now that you've identified these areas like this, there are a lot of them that you can identify. But for me personally, I will only focus on this ones here, because if I should go over to the daily time frame right now, you see that there is still a lot of it behind that you can identify, and not all of them are important. Just focus on the ones that give you the major areas of reversals in the market. Like for example, over here now, I can say, okay, I also want to identify this area here, because this is another psychological area here. We have the 1.08400 level. It's another psychological level. We also have 1.08200 levels and down. But all these ones weren't really there wasn't much market focus around them. That's why we focus on only the ones that give major reversals during the market movement. So now once we have this like this, now the next thing is I will have to go over to the 1 hour time frame and the rest to go look for trading opportunities, because after identifying them, they won't trade themselves, because you can't just wait for the market to pull over here then you start trading. No, we have to go down to the hourly 30 minutes and the 15 minutes to go look for supply and demand levels that we can actually look to trade forward from. So for that, let me jump over to the 1 hour time frame. And then so now here now, before this market gave us this major break of structure here, change of character, you can see the market was an uptrend before this market suddenly broke out of all this area here. So for this particular one here, I will say we have an area of supply here. So here's our major area of supply, which is this last bullish candle before that major fall. So just mark it out on your hourly time frame. So I'm just going to have it here like this as my major area of supply. And then I'm just going to add a tag to it. I already have it there. Okay, so I don't have supply saved in here, so let me just type it in. Text supply. Don't worry. All the ones we are drawing here, we're actually going to better make it smoother on a lower time frame. So I'm just going to save it down as supply. So this video might be really long because I want to break down everything so that even a beginner can understand it. So after this, now the next area here, we have this area of support as well, which you can say so this is it here. I'm just going to mark it out here as an area of support, because even behind here we have a fair value gap that actually led to this area of support, you can see. So we are not going to see it as a fair value gap, but we are going to see it as a support that is now broken, but we are still going to consider it so that when the market comes back into it, we could be looking for a trading opportunity. So here is a support, so I'm just going to put it there, support. That got broken, but I'm just going to put it because the market might use it. The market is likely to come back, at least come back to retest here, since the psychological level can get here and they decide to come back down again to confirm its downwards movement. Because once it creates this structure, we have another supply within. We are going to get another supply within this area where we can look to trade from, because now the market is no longer an uptrend but a downtrend. Now after identifying this on the lower time frame, you can see clearly that this area here, we don't have to look into it. We already have this one here, so no need to look into this area. And then based on where the market is right now, we can't really judge anything because this is where the market ended and then there's no much movement here. But one thing we can see is that we also have this area here, which is a strong low. I would say it's a strong low, which is close to under psychological level. So for this one, I'll mark it separately. Yeah, it's a strong low here, and I'm just going to keep it like this, because after getting now, you are looking for a trading opportunity. We see that we are looking to buy from here, we are looking forward to sell from here. So after this, we go over to the 15-minute time frame. Now for this particular market right now, looking at this current phase won't really give you any much result, so I'm just going to cut it out. So I'm just going to cut this major fall out of it, because that one was actually powered by the news that came in last Friday, the NFP news, and then the other news that came in. So now from here, now let's say, okay, so let's first of all observe this particular part of the market first. Let's assume that most of these parts weren't created and the market just had this area here that we have within here. So you see, let me still cut it a little bit backwards. Okay, so now if you look at it right now, we have this psychological area of 1.0860, and then you can see that this area is actually a good area of support, because if you look at it from here, we have a fair value gap here, a very big fair value gap to be precise, before the market came into it. And you can see that when the market came into this particular psychological level, it bounced off immediately, had a little pullback, came back into it, bounced off, came back into it, broke out of it. That was just a fake out, and then came here, pull back again, and then give you. So now once you see this sort of structure, once I see this sort of structure around the psychological level, what I'm actually waiting for in this sort of scenario when the market has created this sort of movement is that I'm patiently waiting for this market to fall back into this area of this psychological area again, which I've also identified as a support. So for that, let me just lower the market movement a bit. Okay, so now what I do is that I patiently wait for the market to play into the psychological level again. Let me just speed it to 3s. Let's see what happens. Okay, so now once the market play back into it like this, now what I'm looking for is that I'll go over to the 5-minute time frame to see if I'm going to get any major structure that I'm going to look for. Now if you come over to the 5-minute time frame, we can notice something that you can see this market gave us this strong rejection candle within this area here. So now from this area here could be looked for and a great way to actually get a trading opportunity. But one thing I like doing is I like using the 1 hour time frame. So depending on the kind of trade you want to take, and now looking at the 1 hour time frame, I'll patiently wait for this market. Like, I'm not going to rush into this market, because if you look at the 1 hour time frame right now, like I said, the market is more of like it's just ranging within this area. So I'm not going to do any major thing right now, but I'm going to make use of the 50-minute or 30 minutes for the final thing I'm going to do. So now as the market is now, I'll be hunting for an entry opportunity. Now as I'm hunting for an entry opportunity, I'll have this area here in mind, because this is low here. This is a very place whereby the market is likely to fall back to. So I'm not going to jump into this market yet until I get a bullish candle. Like if I'm going to buy from here, I will need a bullish candle to cover this previous bearish candle here. That's an indecisive candle, but I want the market to cover it. Keep my stop loss below here and then keep my take profit around this other psychological level. So now this is simply how I trade psychological level. See, I wait for the market to play into it. Like even if this market was at this top here, I wouldn't get in, but I wait for it to play into this area here and then give me a major bounce off first. Now the reason why you need to always wait, don't just get into the market once the market gets into this psychological level. No, wait for it to give you a rejection that, oh no, I'm not going to fall below, I want to actually go above before you get in. The reason why this is very important is that if you don't do this, you are likely to put yourself in trouble, because this market can decide to, maybe if you set a limit order at this point here, maybe if you set a limit order here, this market can decide to fall way below here and then probably tap into your limit order when it fell in here and then hit your stop loss. That's why once the market trade into a psychological level that you've identified, patiently wait for it to give you a major structure. Like for there, you can go over to the 5 minutes. If you're someone who's good on the lower time frame, also go over to the 1 minute. Like just go lower as possible. Now over here now, you can see where I keep my entry opportunity. Where I keep my entry opportunity is a major area whereby, because for the market to get there, the market will first of all have to take out this area, which will create a change of character, because you can see the original market is a downtrend. So now I wait for the market to take out this area to create a change of character. And what to make this change of character valid is that the market has swept all this low side liquidity here. You can see this big bearish candle has taken out all of these ones here. And then if you look backward also, you see that a lot of liquidity from the back has been swept off already. So now I wait for the market to actually trade above this area. So once it goes above here, I'm pretty much sure that it will, once it tap into this area, it will fall back here, which will might come back and retest here. But then coming back to hit a stop loss will be difficult. So this thing is really simple. Identify your psychological levels with the approach I just showed you right now, and make sure that each level you identify is a key area in the market, either a support, supply, or a demand level in the market, or a resistance. The reason why I need to make sure that there are levels is because we can identify as many psychological levels as possible in this market. But what is the value of these psychological levels? So that is the most important thing in it. So always make sure that any psychological level you identify should be a level that has a high impact in the market direction. So now after you identify it, now on the 4-hour time frame, you go down to the 1 hour, and then that's where you go identify your support and resistance, supply and demand, and any other approach in which you use to trade. If you're a smart money concept trader, you could be looking for change of character, you could be looking for liquidity sweep, you could be looking for fair value gap, other blocks, and the rest. Now once you get them, now you go over to the 5 minutes or 1 minute time frame, and then go look for probably a change of character to support the market direction. So for this particular one, the reason why I will be looking for a buy opportunity here, the first reason is that if I come over to the higher time frame, you can see whenever the market comes in here, it always bounces off immediately. So now with this in mind, I'm very much sure that whenever the market comes here, it's actually going to bounce off again. But then I won't be in I won't set a limit order here. The reason I won't set a limit order here is I will have a low here, which is I will say a low here that the market is likely to come and take. So for the fear of not getting caught out by this low, I'll have to go down to a pretty much lower time frame to go look for a change of character over there. So now the change of character I need is that here is the lowest here is the latest pullback the market created. So if this market can tap out this particular area, then it's clear that the market is going to move to the upside. So that's why I'll set my limit order at the top here after the market has fallen into this area. So from that now we can just play it and let's see. So we are seeing it, okay, and you see how the market struck into it once. You can see, so here now the market first of all tap at this minor area here, and then when you come over, you can see it just took it out really much quickly. Now once you enter a psychological level like this, one thing I normally do is I keep my take profit at the nearest close to another psychological level. So one thing I do is that when I keep take profit really this far, I don't necessarily wait for the market to hit my take profit. And the reason is that markets might go and they might reverse. Maybe it might get close to that psychological level and they just reverse immediately, because within here it's just barely 30 pips. But it's okay depending on how much you are risking, because you don't expect me to risk use one lot size or 0.5 lot size and then see 30 pips as a small pips, because I'm using a high lot size, which means that there's a higher probability that I'm going to make a lot of money more. So you can see what the market did here. Immediately it took out that particular area, it just spiked up straight to the upside. And then when it's spike up, if you go back to the higher time frame, you realize that it actually went to the nearest psychological level straight. You can see it came back close to this other psychological level of 190.00, 109.00 level. And you can see from this reaction also, like just take a look at what it did. It bounced off it immediately. Now the market is still going to trade back into it again. So now this is simply simple. Once you identify the psychological level, you mix it with your normal trading strategy. So if you're a price action trader, mix it with your price action strategy. If you're a ICT trader, mix it up with your ICT strategy. And if you are probably, let me say, a smart money concept trader, mix it up with your other smart money concept. And then that is simply all. The purpose of this psychological level is not that they are a unique strategy on their own. No, they are not unique strategy on their own. You have to still mix them up with your normal trading strategies, because this area just help you identify stronger zones. The honest truth is that psychological levels are very strong zones in the market. Yes, they are very strong and powerful zones in the market. So all you simply have to do is that you can identify them and then look for your support and resistance areas around that area, and then wait for the market to trade back into it. And once the market trade back into those psychological level, there you have to mix it up with your other strategies that you trade. If you're a price action trader, you can look for your normal breakout, pullback, trend lines, and all those your normal trading patterns. Smart money, ICT, the same thing. Just look for those your normal concepts that you trade and then do it. Like now. So now that is simply all I have for you in this video. Psychological levels are just mere zones in the market. You still have to mix it with your usual trading strategy to be able to get the best out of the markets.